So, on the 9th of April, your income statement looks like this. So much of revenue earned. The revenue what you see out here, you can see that this is the revenue, this is the expenditure, and this is the total profit. The profit I have not distributed as dividend. Sir, what happens if I distribute as dividend? Supposing out of this 225,000, I distribute 200,000 as dividend. I have given this as dividends. That means what? What has happened in this particular case out here? What happens in this particular case out there? My retained earnings is only 25,000. When I have given 200,000 as what do you call a dividend, what happens to my bank balance? My bank balance will also go down to that extent out there. My bank balance will also go down to that extent out there if I give as dividends. Because I am not giving dividends out there, what happens? My retained earnings is 225,000 and my bank balance will also not go down by so much out there. I said minus J31, but J31 in this particular case is 0, so it is 0. That's all. Okay, now we move ahead out there. Move to the April 9th. April 10th, April 11th, there is no transaction. April 12th also there is no transaction, so only we directly jump to April 13th. We directly jump to April 13th. Of course, we have a lot of transactions, see till April 30th. We will do till April 30th and then let's take a break and then let's do for the month of May out there. Now, you see in this particular case, purchased 40 tons HR from JS Steel e-auction at 33,000 per ton. The payment was made immediately after adjusting for security deposits. Additional transportation cost of 50,000 is paid through the bank out there. Complications? Don't worry. First and foremost, purchased. How much? 40 tons. What? HR steel. What is the value? 33,000 per ton. Now, let us go back and see that. How many tons? If I sort of look at it, I purchased 40 tons of HR at what price? At 33,000. So, what happens? 33,000 into 40, that is what happens. Now, I purchased, an asset has increased. Now, e-auction. E-auction means after, and the balance was paid after adjusting for the security deposit. How much is the security deposit? 10 lakhs is the security deposit. How much you have to pay? 13 lakh 20,000. You have already paid 10,000, 10 lakhs. How much balance you have to pay? The balance that I have to pay in this particular case is only 3 lakh 20,000 out there is all that I have to pay. The balance I have to pay is only 3 lakh 20,000 is all that I have to pay as of now. Sir, what happens to the security deposit? The security deposit, whatever you had paid, is adjusted. You have, for that value, you have basically purchased. For that value, you have basically made purchases. When you have basically made purchases for that value, do you own that security deposit anymore? No, it is adjusted. You don't own that security deposit anymore in this particular case out there. You don't own that security deposit anymore in this particular case out there. That money does not belong to you because you had a security deposit of 10 lakhs. You had to pay 13 lakhs 20,000 for the purchases. This 10 lakhs what you had paid for security deposit is adjusted with that. The balance of 3 lakh 20,000 you have basically paid in this particular case out there. So, the security deposit with JS Steel now is basically what do you call it as 0. There is 0 security deposit with JS Steel out there, and these are the purchases what you have made. Now, it does not end there. Additional transportation cost of 50,000 is paid to the bank. Transportation cost. Now, what is it? There is an argument that you will say, sir, it is an expenditure. First thing, my asset will go down because paid through the bank means I have paid 50,000 through the bank, my asset will go down. Yes, asset will go down. Agreed. No questions on that. No comment, no questions on that. Of course, yes, asset has gone down. But is it an expenditure? Yes and no. Why yes and no? Normally, in this particular case, you have incurred an expenditure of transportation for purchase of a raw material. When you have incurred an expenditure for purchase of a raw material, what is the cost of that raw material? The cost of that raw material is the landed cost at your shop floor or at your warehouse. So, this 50,000 rupees will be included in the cost of the raw material itself. For example, you buy a car. I will ask you what is the price of the car. What is the price you are going to give me? X factory, X showroom, or the landed cost, that is after paying for your registration, insurance, everything. So, on road price. When we say on road price, that is the value of the car that you have basically purchased. So, what happens in this particular case? When we say cost of the machinery is, or cost of the raw material is always the landed cost at your shop floor or warehouse. You purchase a machinery, the machinery has to be imported by ship from Italy, and you pay what is called as a huge amount of shipping charges, customs duty and everything, and then it comes to your shop floor, and there is an installation process which takes place for about 3 weeks, and there is a trial process which takes place for about 2 weeks. And then when you say what is the cost of the machine, the cost of the machine is inclusive of the value of the machine at which you have purchased, plus the cost of transportation, freight, plus the customs duty, plus the trial runs, everything. That is all the money that is spent till the stage that the machine is usable condition, in a usable condition. So, when we say cost of raw material includes the landed cost. Sir, for the other raw material we purchased, you didn't include it. There was no transportation cost involved there. Maybe the seller transported it free of cost. I don't know. It is not mentioned. In this particular case, what is the value of this 40 tons of steel what I have? The value of this 40 tons of steel what I have is 50,000 plus. So, it will be that is about 13,70,000 divided by 40 tons. What is the value of the 13,70,000 divided by 13,70,000 divided by 40,000 will be the value of the machine value per ton out here. That is the value at which I will issue for production. 13,70,000 divided by about 40 tons out there is the value at which I will issue for production. 13,70,000 divided, that will be the value cost of my raw material per ton. It is always the landed cost. It is always the landed cost out there. The landed cost will be 34,250. That is 34,250 will be the cost per ton that I will issue for production. My landed cost 33,000 is the price at which he is sold. I have spent transportation, so my landed cost per ton is 34,250. Am I with you on this? That is the reason I specifically included. So, sir, is it wrong if I take it as an expenditure? Well, yes, it is. It will be wrong if it is a transportation cost which is independent of this material. I'll say I generally incur transportation costs for my employees to come to the factory and go back. That is an expenditure. I'll right away I write it as an expenditure. In this case, this expenditure is related to a particular purchase, so I will only add it to that particular purchase what I have basically made out there. With you on this, now we'll move ahead. Now I move to April. I have changed the date here. I'm April 13. No, I'm not changed it. I just will make the change. I'm sorry. April 13th. I just want to make the change, and then I will make the change here also. April 13th. So, April 13th, this is how your balance sheet and income statement will look like out there. Now, I move to the next date, April 17th out there, April 17th. Order received from walk-in customer, Modern Barrels, for 12 tons of HRPO at 39,000 rupees per ton. Received an advance of 10% of the amount through bank transfer. The order to be processed and delivered on April 25th, and the balance and the customers settled the balance on the same day through RTGS. As of today, what has happened? You have received an order, it's a contract, but you have received amount equal to 10% of the value of the order. What is the value of the order? 12 tons into 39,000 per ton. That means what is the value of the order? 12 into 39,000 sale. That becomes the value of the order out there. On that amount, I have received 10% as an advance. Okay. When I received an advance, what happens? My bank balance increases. So now what is the order? What is the value of the order? The value of the order Suhail has calculated. It is 4,68,000. That is as you see out here. That is what we say is 25 tons of that is about 12 tons into that at 39,000 per ton. 4,38,000, right? 4,68,000. I'm sorry. 4 lakh. So what has happened? You have received 10% of the amount of 4,68,000. 4,68,000 into 0.1 is what you have received. So what happens? Your bank balance has increased to that extent. Your bank balance, you can see the formula bar. Your bank balance has increased to that extent out there. But then what is the other aspect that is getting impacted among the assets? Is that cash you have received? Is that money yours? No, it is only an advance. It can be adjusted only on the day the order is executed. As of today, it is somebody's money which is with you. Supposing the order gets cancelled the same day, you are liable to return the money. You are liable to. So what happens? This is a liability as of today. Advance from Modern Barrels. How much is it? It is about 4,68,000 into 10% of it is what you have received out there. It's an advance. You are liable to pay back if the order is not executed. The day order executed, we will adjust it. Till that day, it's an advance. It will remain as a liability. So it is on April 17th. I will make the change out here. On April 17th, my balance sheet will look like this. From April 1st to April 17th, what happens? My income statement will look exactly like this. Moving on further, from here, we move to the April 18th transaction out there. Sir, order is executed, payment is made through RTGS. We will worry about it on what day? They have said April 25th. We will worry about it on April 25th. As of today, we are only at April 18th. So we will worry about it on April 25th. April 18th. While processing the above order, 25 tons HRPO lot from Tat Steel was found rusted. Rishi spoke to Tat Steel plant immediately, and upon further enquiry, they agreed to take back the 25 tons of damaged material. However, they would only be able to process the refund as a credit note. That means what is happening? 25 tons is damaged. It is returned back to whom? To basically the supplier. So when you return back to supplier, are they giving you cash? No, they are giving you a credit note. That means next time you purchase, we will adjust it. That means what happens? Till you purchase the next time, your money is with them. Your money is with them out there. Now let's go back in this. Let's go back and see the transaction. This is April 18th. Am I right, Suhail? 18. Let me adjust the date first. What does it say? I had 45 tons of HRPO. Out of 45 tons, how many tons are damaged? Number of tons that is damaged is 25 tons are damaged. So what is the value that is here? Instead of that is, I would say in this particular case 35,000 45 tons at 35,000 per ton. I am returning. When I am returning, what happens? When I am returning, what happens? It is reducing the value, that is, it has reduced. I have returned to 25 tons. That means how much I own? I own only 20 tons as of now. 45 minus 25. I own only 20 tons as of now. I have returned. So that is not in my ownership. Now what is happening? They are going to give me a credit note, that is my money with them. That means it's an asset, that is credit note from Tat Steel. What is the value of the credit note from Tat Steel? 25 tons at 35,000 per ton. That is the value of the credit note from Tat Steel out there. So that is the value of my money which is with them. One can argue, sir, what happens to transportation cost, etc., if you are incurring? Yes, if the transportation is incurred by you, it becomes an expenditure, cash is going down. If the transportation is incurred by them, that is, they promise to pick it up from your factory, no impact on your balance sheet out there. Here, I have assumed it that it's all picked up from their factory, so I have not taken it as an expenditure. If you want, you can say, in transporting the goods back, they incurred, the TRC incurred an expenditure of whatever X amount out there. You can reduce from the bank account and you can add it to an expenditure. I'm not really going to be much worried about it in that particular case. Now I go on further in this particular case out there. I go on to the April 23rd transactions out there. We see that sundry expenses incurred regarding logistics amount to 65,000 paid by the bank. Possibly this was the amount that was incurred for transporting the goods and to and fro, manual labor, whatever it is. Sundry expenses have been incurred. That means moment it is 20 moment it is this 23rd of April. I will go to 23rd of April out here. Moment I said 23rd of April out here. Sundry expenditure, it is an expenditure which is incurred, expenditure incurred. How much is the value of the expenditure? 65,000. Now, when the expenditure is incurred, of course, expenses is getting impacted. What is the other one that is getting impacted? It is paid for. Paid for by what? By the from the bank account. So what happens? Minus 65,000. So minus 65,000 out there. That is all paid for. So your asset is getting impacted. Expenditure is getting impacted for that transaction. Now we move to the April 25th. April 25th transaction. What is April 25th, sir? There is no transaction listed. Please go back and refer to the transaction dated April 17th. You see that model barrels, these were delivered on the 25th. That means what? 12 tons of HRPO. You first and foremost, what is the thing? You have utilized 12 tons of HRPO out there. You have utilized 12 tons of HRPO out there. You utilize. So what is the balance left? 20 minus 12, 8 tons is left out there. So when you have utilized 12 tons out there, 12 into 35,000 per ton. First and foremost part of the I am splitting the transaction into two. One is utilization, second is the sale. So what is happening? 35,000 out there. So I have utilized. My asset comes down. When I have utilized, what happens? My expenditure increases. 12 ton HRPO for modern barrel. How much is it? 12 into 35,000 per ton. This is what is utilized. Second part, sale made and amount received immediately. That is what it says. If I go back to the April 17th transaction, it says balance was settled by the customer on the same day. What is the value of the sale? Value of the sale is 12 tons of HRPO for modern barrels. What is the value? 12 ton. Value of the sale is 39,000 per ton. This is the value of the sale. Revenue is impacted. What is the other account that has to be impacted? The other account that has to be impacted, obviously, because they settled everything on the same day, the other account that obviously has to be impacted will be the bank account. What will be the value that you will receive? The value that you will receive is this 4,68,000 minus the advance that you had received earlier, 46,800, minus the advance that you have received 800. That is what you will receive. Am I right with you? That minus the advance what you have received, that is what you will receive. That is 4,68,000 is the value of the sale minus the advance that you have received, and that is what I have put out there. So what happens? Revenue getting impacted, assets getting impacted, plus the advance that is what you are liable to pay is not a liability anymore, is basically not a liability anymore, because this advance, for this advance you have basically delivered the goods out there. After April 23, after April 25, after the 25th transaction, go to the April 29th transaction. What does the April 29th transaction tell you? Withdrew from the bank for petty cash and other cash related expenditure a sum of rupees 5 lakhs. April 29th transaction. Withdrew from the bank a sum of rupees 5 lakhs for meeting the cash expenditures. So what is happening? Bank, you had, what do you call it as, you had about 43 lakhs out there. You are withdrawing money from the bank. How much? You are withdrawing money from the bank to the extent of about 5 lakhs. So what is happening? Bank balance goes down, asset getting impacted. What is happening? That money what you have withdrawn is sitting in the form of cash in your cash box out there, is basically sitting in the form of cash in your cash box out there. So asset is getting impacted again. That's all that happens, nothing beyond that. That's all that happened, nothing beyond that. Now let's go back to the April 30th transaction out here, April 30th transaction out here. Now let's go back to the April 30th transaction out here. April 30th transaction, April salary is credited to the employees and directors accounts. The 4 employees for manual labor were paid in cash. Other petty expenses of 5780 were settled in cash. Electricity bill of 22,500 was paid through check out there. Now let us first start with director salary. Director salary. Director salary in this case, how much is it? 70,000. How many people are the director? 2 fellows are the director. It is an expenditure. Expenses get impacted. When you pay, what happens? The bank account also gets impacted. That also reduces. The bank account also, basically bank balance reduces when you pay the director salary. That's an expenditure. We have paid, it is impacted. Next, in this particular case, if I read through from my sheet of paper what I have, if I am going to look at all April salaries were credited to all the employees. Who are the employees? Let us go back and see who are the employees. First and foremost, accountant and stock manager, accountant salary. Then what is called a stock manager salary. And then what is the salary? They were transferred from GS at 20,000 each. So what happens? Accountant salary is about $20,000 rupees each here, and my stock manager salary is again 20,000, and obviously the amount will be going out of the bank out there. That is all. I am just reducing the amount from the bank out there. Next, that is an asset is getting impacted and an expenditure is getting impacted. Next, I see TR also hired 2 foremen for operations of both machines at 15,000 per month. That is, I will say foreman salary at 15,000. 2 people at 15,000 out there. I'm sorry, 1 second. 2 people at 15,000 per day. So out here 30,000. Now what happens? Further, my bank balance in this particular case goes down by further 30,000 out here. A shed manager with a monthly salary of 20,000 and watchman salary is set at 8,000. Shed manager, watchman salary, shed manager at 20,000, watchman at about 8,000 out there. And then what happens? My bank balance further goes down, because obviously when I pay salary, what happens? The cash balance basically goes down in this particular case out there. The cash balance keeps going down in this particular case out there. I have not finished. 4 other people were hired as manual labor on the site at 8,000 per month. Now, manual labor salary, and the statement says the manual labor were paid for in cash. So, manual labor were paid for in cash out there. So, manual labor, how many people are there? 4 people are there. 4 into 8,000 out there, and 32,000. That is unfortunately or fortunately, whatever it is you can say, that is paid for in cash. So, what happens? My cash balance reduces by that extent. My cash balance reduces. Bank balance not, cash balance reduces. Further, I am going to go back and read that statement out there. Other petty expenses of 5780 was settled in cash. So what happens? Petty expenses of 5780, petty expenses out there, petty expenses were 5780 paid for in cash. That means moment you pay in cash, what happens? My cash balance basically reduces out there. My cash balance basically reduces. My asset is impacted, my expenditure is impacted out there. I read further. I have to make the date change. I'll make the date change. Electricity bill of 22,500 was paid through check out there. Electricity bill of 22,800 was paid for by check. Electricity bill of 22,800 is an expenditure that is incurred. Obviously, when you incur that expenditure, what happens? Your bank balance basically goes down by that extent out there. 22,500. Now, this is all as of April 30th. The balance sheet is of as of April 30th out there. The balance sheet and income statement is of April 30th. When I did the 29th transaction of withdrawing the money from the bank, I didn't adjust the date. Please make a note of all that. Please make a note of all that. So, as of 30th of April, your balance sheet looks like this and your income statement looks like this. Have I finished? I am not finished. There is one more transaction on the 30th. Loan interest payment made to ICICI Bank for the month of April 2020. Rent for the month of April debited for factory shed. Now let's go back to all this. Now rent. What is the rent for factory? Rent for factory shed. If I go back, I will see, you can see in the first statement out there that the rent for factory shed is 50,000. It is an expenditure. Then what happens? My bank balance further goes down by 50,000 out there. Next, what is it? There is a interest on the loan. Interest is payable monthly. interest on ICIC loan at 11%. What is a loan? Loan is about 22 lakhs 80,000 is the loan at 11% out there, at 11% out there, in this particular case out here, in this particular at 11% out there. Unfortunately or fortunately, what happens? This is for 1 month, whatever the value of the interest out there, because I am taking it for the full. Sir, you might say, sir, I took the loan only on the what do you call it as on the you took the loan right on the first, because when you on the second. Sir, why are you taking it from first? Let's keep it as the loan was sanctioned on first, and then from the first itself, let us keep it for the whole month out there. I am not getting it date wise. So, this is the loan, 11% is the interest. So, why divided by 12? Because we are prepared, it is only from April 1st to April 30. 11% is for 12 months, for the entire year. So, this is the interest. So, to that extent, again your bank balance will go down to that extent. Again your bank balance will go down to that extent. Is that all? No, there is still some more left. There is something that is beautifully called as depreciation. There is something that is beautifully called as depreciation. Now, what is this depreciation? Let us read this. Depreciation means reduction in the value of the asset due to usage and passage of time. I repeat, that is reduction in the value of the asset due to usage and passage of time. What is this usage and passage of time? Now, supposing you buy a brand new car, the day on which you buy, you are posted in one of the on-site locations somewhere abroad. You don't utilize the car, you leave it the car parked in the garage, close it, and then go away for 2 years or so. At the end of 2 years, you come back and you say, I don't want to use this car, I want to use something, I want to buy something better. You go back to sell it in the market. The price what you will get will not be the same price. The price what you will get will be less than the value, far less than the value what you have bought, despite the fact that you have not utilized it. That means there is reduction in value because of a passage of time. During that time, there are better models which are coming and so on and so forth. Supposing you had not gone on site and you utilize the car for 2 years and you want to upgrade and you want to sell it at the end of 2 years, the value would reduce further even, because but you have utilized as well as there is a passage of time, so the value reduces. Depreciation means utilize the value, reduction in the value of the asset due to usage. I gave an example. I buy a machinery for 10 lakhs, it can manufacture 10 lakh pieces of whatever, some product, and then the value reduces. Utilization. So, in this case, these three assets have been utilized, as well as there is a time lapse of 1 month, and because of which the asset value will reduce. These three assets which I have highlighted on the screen, you can see decoiling, shearing and office equipment have been utilized, as well as there is a passage of time, because of which the value of the machinery will reduce, and that is what is treated as utilization. So, that is what will be an expenditure in the depreciation out there. Now, how much? What is the depreciation? That is decoiling machine, then shearing machine, then office equipment. Let us go back to each one of these. Like, go back to the statement of the second out there, that the purchase, because that is where all the details are given out here. The machinery would be depreciated over a useful life of 12 years with a salvage value of 4.8 lakhs out there. First one. So, let us go back. Now, what is the value of the machine? 42 lakhs is the value of the machine out there. The machinery value is 42 lakhs. What is the salvage value? 4,80,000 is the salvage value. this entire thing is going to be depreciated over a period of 12 years out there. This entire thing is going to be depreciated over a period of 12 years out there. This entire thing is going to be depreciated over a period of 12 years out there. Over a period of 12 years, the entire thing will get value will reduce. But now we are looking at depreciation for 1 month out there. So what do? I again further divide it by 12. That's all. I further divide it by 12. So what happens? The value of the decoiling machine that I have utilized for this month, or that has lost value in this 1 month, is to the extent of 25,833. Am I right with my calculation? Is to the extent of 25,800. That is the value that I have lost in the month of April due to usage and passage of time of the decoiling machine is to the extent of 25,833. I am treating as an expenditure. So what is the value of the machine as of 30th of April? The value of the machine as of 30th of April is the 42 lakhs what I have purchased minus the value that it has lost. This is the value of the machine that is as of April 30th or 1st of May, end of April 30th or 1st of May beginning. That is the value of the machine. So the value of the machine is, what is the value of the machine you own? It is not 42 lakhs. It has lost value to the extent of 25,833. So value of the machine what I own is 42 lakhs minus this is the value of the decoiling machine that I own. I will use another example. Decoiling, sorry, shearing machine, the salvage value is about 19,000. That will also be depreciated over a period of 12 years because that is what it is given. Shearing machine is, what is the value? That is shearing machine, if I look at it, is 15 lakhs. What is the salvage value? 90,000. That is all estimated, and it will be depreciated over a period of 12 years out there. It will be depreciated over a period of 12 years out there. That is, over a period of 12 years, this machine will be depreciated. That is 14 lakh 10,000 worth of machine has to be depreciated. Now I need to calculate it for 1 month. So what happens? The value of the machine that I have lost out for this month because of usage and passage of time is 9792. So what is the value of the machine as of April 30th? As of April 30th, the machine which was at 15 lakhs has lost value to the extent of about 9792 out here in this particular case. That is the value of the machine that I own as of that day. Now that is what you see. An asset is getting impacted, expenditure is getting impacted. Asset is getting impacted, expenditure is getting impacted. Now I move further in this particular case. Office equipment which was 1.5 lakhs paid, no salvage value, 3 years. Office equipment, what is the value of the office equipment? 1.5 lakhs, 1,50,000. What is the salvage value? 3 years. What is the, in this particular case, what is the salvage value? Salvage value is 0 out here. Salvage value is 0 out here. Depreciation to be done over a period of 3 years. But I am worried about 1 month, so divide by 12. So my office equipment reduces value. I utilize the value to the extent of 41,667. It was for 1,50,000 divided by 3, that is for 3 years, again divided by 12. So naturally for 1 month it is 4167. So what happens? My office equipment which was 1,50,000 now has reduced by value at the end of this day by so much out there and this is all the value of that is all the value of the equipment that I own. So you can see the balance sheet sitting tight out here. You can see the balance sheet sitting tight out here. I will delete this. Oh, sorry, I made a mistake. I'm sorry, I made a mistake. Yeah. Now we can actually see your balance sheet basically sitting tight out there. So what happens? This was my revenue, this is my expenditure. I made a loss of over 200,972. The loss is borne by the capital provider. You can see this. The loss is borne by the capital provider. So, what is the net worth? Net worth, which was 5 crores, has come down to about 4.9 crores out there. So, what has happened? The loss is taken by the capital provider. So, the capital, which was 5 crores, has reduced. The value of the capital has reduced. What is net worth? This is total of equity plus retained earnings is net worth. The other way to look at it, value of the asset, the total assets out there, the value of all the assets minus the liabilities, minus this liability, that is we pay off the liability, what is the value left, that is what is the net worth. Assets minus liability, liability is this part is liability, minus the liability is what we call it as net worth or the value of equity. Net worth or the value of equity. Equity value is reduced because you have made a loss. Equity value is reduced because you have made a loss out there.